We're going to give it a few more minutes for people to join. We're going to give it a few more minutes for people. All right, one more minute and then we're going to start. Cool. Welcome to the Block Research's monthly markets update. We're doing a new way of presenting our monthly analyst calls. We previously used a different platform and now we're using a new platform. We're also live streaming to Twitter or X. So yeah, feel free to ask questions in your appropriate platforms and we will get to them near the end of the call. The way these monthly markets update work is we have two presenters. One, me, I'll present interesting trends that we've noticed in the previous month, September, and then my supporting analyst, John Dantoni, or a future supporting analyst will present on a specific topic. This month's topic will be Q3 2024 investment trends around blockchain investments. So yeah, and then we will end this call with a Q&A chat where people can ask questions concerning the topics that we brought up in this call today. Again, feel free to ask questions if you're on X Spaces. If you're on Riverside, there's a chat box for you to ask questions. If you're on X Spaces, there's a scrolling chat that you can ask questions, and we have someone who's going to pick up those questions and share in our channels, which will we answer at the end of the call. So yeah, we'll get started. My name is Steven. I'm the Director of Research for the content side on the block. Joining me is John Dantoni, Director of Research for the private funding side. We're going to kick it off with markets, data, and insights, covering specific interesting topics and charts that we've noticed in the past month. Specifically, we're going to give an update on Bitcoin and Ethereum ETFs, look at some charts on slow resurgence of DeFi leaders, specifically Aave and MakerDAO Sky. And then a quick look into Solana, its dominance and new token deployments, but a slowdown in fees. So Bitcoin ETFs. Bitcoin ETF volumes in September saw a 29% decrease compared to the month of August. Daily volumes averaged $1.45 billion. This marks the lowest trading volume month since the ETFs were launched in January. So yeah, last month, 29 billion in trading volume. The previous month, we were near 50 billion. Despite the decrease in volumes though, Bitcoin ETFs saw $1.26 billion in net inflow, which is a positive turnaround from the previous month in August, where it saw its second full month of outflow of 94 million. On the Ethereum ETF side, spot Ethereum, spot Ether ETFs saw over $3 billion in trading volume in their second full month of trading. So in September, spot ETFs generated $3.3 billion in trading volumes. This is down 37% month over month from 5.2 billion in August. And this is the lowest volume month for ETH ETFs in their short 2.5 month of trading. So we don't have a lot of data yet, obviously, to determine whether this is like a very bad month or a generally average month for ETH ETFs. We're going to probably need a few more months of data to determine what's the average monthly trading volume for ETH ETFs. So while August saw its first net inflow month for ETH ETFs, so September saw $46 million in net outflow, right? So we have 2 full months of trading so far, August and September. July was a half month of trading for ETH ETFs since they launched mid-month. So we have 1 full month of net inflow, 1 full month of net outflow. On the outflow front, not surprisingly, Grayscale's ETH product saw made up the bulk of the month's outflows. Ethereum DeFi leaders see slow resurgence. So we're going to start with Aave here. Aave's share of DeFi lending TVL, it's the highest in 13 months, around 70% of all major DeFi lending protocols on Ethereum. Aave has that large share of that TVL. And it also has nearly 70% share in both in outstanding debt on lending protocols on Ethereum. So that's, I guess, loans taken out on Aave. Also, its highest in 13 months. In September, Aave's TVL reached $17 billion. That's the highest since late 2021, near DeFi peak. And its outstanding debt reached $6.7 billion, which is roughly 70% away from its 2021 DeFi peak. But yeah, I want to reiterate again, Aave's share of the total market in DeFi lending, specifically just on Ethereum, the main chain, is 70% compared to its largest competitors. We didn't include some of the smaller players, because they make a pretty insignificant part of it. So we're in our analysis here, in our chart here, we only included the largest players. Aave has benefited from the success of its V3 upgrade last year, and the excitement around its V4 upgrade, which is still in progress. I think the idea is sometime late this year into early next year. Timelines, still not extremely solid, but we're going to get there at some point. And then the successful strategic partnerships and single market deployments with Lido and Sky, formerly MakerDAO. And speaking of MakerDAO, last month saw the deployment of Sky, which is a rebranded protocol or full rebrand of MakerDAO. MakerDAO is still technically around since it's decentralized. No one can really shut down MakerDAO. But the team and Rune, the founder of MakerDAO, has obviously been encouraging people to upgrade and migrate their tokens, specifically MKR and DAI, over to the new tokens, rebranded token USDS and Sky. Because of incentive programs deployed in Sky, its launch actually brought in net new money into the MakerDAO/Sky ecosystem. And we can see that by a share of USDS and DAI compared to the overall stablecoin supply, going up 1% right after the launch of Sky. So that's actual net new money coming into the space versus just people who are currently holding DAI just converting to USDC. If that was the case, the supply would still stay stable, regular, and they wouldn't really grab new market share, right? So in this case, it means people are using depositing ETH or collateral that's supported by Spark protocol, one of Sky's many future, I guess they're calling them stars, but one of the Sky's many future sub DAOs or sub protocols to mint USDS off their ETH. So we're seeing net new supply of stable coins. One of the reasons why we're seeing this inflow of new supply is large incentive programs. sub-DAO slash stars like Spark protocol and future ones are going to start launch their own governance tokens, and obviously people who are trying to yield farm those governance tokens and start to earn future yield once those tokens go live are depositing stable coins, USDS specifically, into various into Sky's ecosystem. So yeah, the combined supply of DAI and USDS pre-deployment was 5.4, and post-deployment at the end of September was 6.4 billion. It's slightly even higher now, but we're focused more on September data. But yeah, it's showing that it's MakerDAO slash Sky strategy is bringing in new money into space, which is beneficial. Obviously, unsure whether this money is going to stay in the ecosystem if incentive programs run out or stop. But this is the launch of Sky is the first of a multi-phase plan by MakerDAO to reach its end game plan. So there's going to be many more sub-DAOs slash stars that are going to be deployed in the future. So I wouldn't be surprised if this money stays in the ecosystem for a while as it continues to shift between various sub-DAOs to earn their future tokens as they go live over the next few years. And then now on to Solana. Solana dominates token deployment, but fees are starting to slow down a bit, right? So as of the end of September, 84% of tokens, newly deployed tokens on decentralized exchanges were deployed on Solana. Base holds second place with a 12% share. So it's still, I mean, relatively insignificant considering how large Solana has, how large of a market share Solana has. Deployment dominance fueled by meme coin mania. Coins like with Bonk, Iggy Azalea's Mother token, and then also paired with the success of Pump.fun, has shifted most of the attention from token developers and meme coin traders to Solana. That said, interestingly, fees and revenues generated by Solana and Pump.fun are actually slowing down. In September, Solana generated $23 million in fees, while Pump.fun generated $13 million, down 26% and 37% month over month, respectively. Yeah, this is one of the lowest fee months for Solana since, I believe, February. So it's 6 to 7 month low for Solana and monthly fee revenue generation. It's one of the lower ones for Pump.fun, but yeah. So key takeaways. Marked one of the lower trading months, for one of the lowest trading months. September marked one of the lowest trading months for Bitcoin and ETH ETFs. While that said, BTC saw net new inflow, while ETH ETF saw net outflow. DeFi leaders such as Aave and MakerDAO are seeing signs of resurgence, specifically interest around just Aave's V4 deployment, MakerDAO working on expanding its Sky ecosystem. Solana continues its token dominance, but fees are slowing down. Fees generated are slowing down, and Pump.fun is also seeing a decrease in monthly month-over-month fees. But yeah, we're going to move on to the next section with John hosting. So moving it on to you, John.
Hey, thanks, Stephen. Yeah, so my name's John Dantoni, one of the directors here at the Block, covering everything when it comes to funding and VC activity in the blockchain sector. So yeah, in terms of just key trends and highlights, what we're going to be covering today is mainly just going to be going over Q3 and basically what investment trends occurred. There was a drop-off in deal activity, so we're going to talk a little about that and what some of those catalysts were. We're going to be talking about AI, DePIN, and SocialFi, how that's been quite an investment narrative over, I would say, past 6 months, potentially longer. and then that'll go into the record year so far for DePIN investment. We'll go into specific trends on specific blockchain networks and which chains have been attracting the most investment, and then pretty much just some key takeaways and a market outlook. Stephen, you can go to the next slide. So when we're looking at this past quarter, and truthfully, this has been a recurring trend recently. If you've been following any of our recaps, typically what we've been seeing is we see pretty much, we'll see from a quarterly perspective, we'll see an uptick in investment, but then we kind of see a decline. But this month, I mean, this past quarter, it was pretty much similar to Q2. So total investment was about 3.4 billion. So very similar to Q2. One notable part about this was that we did have 3 straight quarters of investment increasing. So we did have some encouraging signs, but we kind of stalled out this past quarter, which makes sense with what we've been seeing on a monthly basis, where we kind of see an uptick and then it kind of goes down, uptick goes down. Investors are kind of a little cautious where the market is at the moment, since we've been going kind of sideways. The biggest notable part of Q3 was deal activity was down about 22%. So in Q2 we had about 834 deals, whereas deals had declined up about to 649 in last quarter. One of the most notable parts of this drop off was that it was largely pre-seed deals still maintained strength. So there was the same amount of deals in Q2 as Q3, even though we had that 22% drop off. That's largely because we had a large amount of accelerator programs that occurred in the past 3 months. And then another notable sign was mid-stage deal activity actually remained the same. So every other deal stage and deal type had declines, but mid-stage and pre-seed stayed flat. Mid-stage was a little notable because mid-stage and later stage deals, they've kind of had trouble pretty much since the end of the last cycle of 2022. During that price cycle, we saw a large uptick in those type of deal activity, but pretty much since then we've not seen that type of occurrence come back. But of those 8 deals, some of the notable stuff was actually 2 of those were Solana related, so we'll talk about that later. But Helios, and then I believe Drift Protocol, which is derivatives, both Solana based. And then there was other assortments such as say SDAX, which is I don't know if I'm saying that right, but based in Singapore exchange, and then also they also work a lot with security tokenization, which has real world assets, which has also been another investment trend over past 6 months or so. Stephen, you go to next slide. So yeah, and as I mentioned with the pre-seed deals and mid-stage, how they stayed flat, where most of this drop off was occurring was basically at these seed and early stage levels. So for seed deals, for example, we saw a 35% drop off Q over Q. Early stage had dropped by 24%. And then strategic deals, which if you're a large follower of the crypto sector, it seems like every deal these days is basically called and labeled a strategic deal, but most of these deals are occurring at, they're basically early stage, seed stage companies, and there was a drop off about 32% in these deals as well. Despite the drop off though, and deal activity, seed stage companies did raise the largest amount of money last quarter, more than a quarter of that investment, about $893 million. And then, yeah, like I had mentioned in the previous slide, pre-seed deal activity it remained strong. We saw accelerators such as A160's Crypto Startup School. Some of those deals were large contributors to that deal count remaining the same. So, for example, I don't remember the exact amount, but I believe it was at least 30 companies, for example, that was part of that cohort, and there were many other accelerators last quarter. You go to next slide, Stephen. So when we're looking at just overall investment trends and looking at these different categories, one that has really stood out recently is our Web3 category. So our Web3 category, This is pretty much going to the types of companies that we put into this is pretty much any type of like, on-chain applications that I would say are non-financial in nature. So all of like our SocialFi, DePIN, also like some of these decentralized AI protocols, these are all getting thrown into our Web3 category, and that's for a large reason why we're seeing some noticeable trends in this category. So for example, Web3's total investment for the past 2 quarters now has surpassed NFTs in gaming, which is quite notable, as NFTs in gaming for quite a while was a very strong investment thesis and still is. And then the 396 deals in 2024 already, it's the largest year for Web3 deals, and that's even including like past bull market cycle. And Web3 projects are projected to receive about 2.1 billion. That would match 2022 figures, which is quite notable because if we look at any of these other categories, whether it's NFTs, gaming, infrastructure, DeFi, the investment figures in 2022 are all significantly higher than what any of these other are projected to come in. And so the fact that Web3 is going to mimic 2022 highs is quite a feat. And key drivers, like I had mentioned, is AI, DePIN, and SocialFi. And that'll lead us into the next slide, where we're just going to talk. You can go to the next slide, Stephen. More specifically on DePIN investment, which is largely been definitely the main contributor to this uptick in Web3 activity. So since 2017, DePIN has received about 2.1 billion in aggregate. The 2024 projections are it's going to come in at around $1.1 billion in investment over about a little over 260 deals. These projections would result in roughly 353% year-over-year increase in deals, and then about a 306% increase in total investment dollars into DePIN. So 2024 investment already in DePIN is already the highest it's ever been, and 2024 with those projections, it's going to be about nearly double the previous record, which was about 550 million in 2022. So that's just some context on just like how large of a driver DePIN investment has been this year. You can go to next slide. And then we really wanted to look at just like chain-specific investment trends. One thing I want to definitely highlight here is this sometimes can get tricky because when we look at investment in terms of when we look at these funding deals and we look at these applications and which chains they support, most applications these days are multi-chain. So, for example, one investment deal can count for multiple blockchain networks when we look at these raw deal counts. So one project can raise and they can be Solana project, they can be a Ton project, and they can also be an Ethereum project. But you could still look at and see some notable trends here. So for example, Ton, Solana, Bitcoin, and Base are the ones who have certainly stood out the most. So Ton, for example, they were a standout actually last quarter because most deal activity actually was slightly down for specific chains, but they actually was an outlier where they had growth, and it was about 263% Q over Q increase to about 29 deals last quarter. And there's expected to have about 70 deals by year end, which would equate to about 347% year over year growth. And then when we look at like Solana, for example, and as Stephen was highlighting the network activity and Solana tokens, investment Solana is showing very similar signs in terms of the uptick in its deal activity. So it's supposed to have an increase about 162% year over year. There was only about 118 projects that raised funding supported Solana last year, and it's projecting to be about 309 this year. And the same when we look at Bitcoin deal activity, it's been all-time highs, and this is just looking at Bitcoin specifically. When we start to include Bitcoin L2s, that number in the data gets even much larger. But for purposes, it's just looking at just Bitcoin specifically. We're not talking L2s, Lightning, Merlin, B squared, yada yada. But even just looking at Bitcoin in general, we're large, expected to grow, large increase, and then also Base definitely stood out as well. So Base testnet launched in February of, I believe, 2023. So it's been about a year, and when we look at year-over-year growth, about 225% year-over-year. And then the one last thing I want to mention is, as we were saying that, when we look at these deals, there can be a lot of double counting, right? That this project can support Solana, Base, also Monad, et cetera, et cetera. But we also looked at unique projects as well. So we looked at projects where we looked at chains that are just projects that are just support right now for only one chain. And when we looked at it from that perspective, a lot of this still looks similar, but for example, the Base. When you look at Base, it's not just because of EVM support that we're seeing that uptick, that we're actually seeing a Base stood out amongst most of these projects where most of these chains where when we look at projects that just have support for one chain right now, Base projects were receiving a significant uptick in funding, and their deal activity was increasing. Go to next slide. And yeah, just to finalize, just like some key takeaways and market outlook. So pre-seed and mid-stage deals were resilient last quarter. I would say that, pre-seed and seed deals typically have showed resilience throughout the past year or two, and historically, to be honest. But the mid-stage deal actually was a good sign, because mid-stage deals and later stage deals have struggled. So it's a good sign, showing that they remained flat, even though deals were down in general 22%, with strong accelerators. Seed and early stage deals were declining. I mean, recovery could be likely tied to macro conditions. As I had mentioned earlier in the earlier slides, is that typically on a monthly basis, what we've been seeing is we're seeing an uptick in funding, and then it kind of comes down, goes up, goes down. And that cycle's been going on for past 12 months at least. So we'll likely, probably see some of that again. We can see that increase in deals again if that pattern follows. Then we got Web3, AI, DePIN, and SocialFi is driving a lot of the growth. Which is why we've been seeing a record year for DePIN, and we're also seeing record years for Bitcoin investment when we look at chains. And then other stuff like TON, Solana, and Base are standing out as chains that are having strong growth in deal activity and funding of dollars.
Great. We're going to open this up for questions. So feel free to ask questions in the chat if you're on Riverside, in the chat box on your right. And if you have questions, if you're streaming us from X, there's a chat box where you can ask questions, and one of our analysts will grab it and share it over here. So yeah, I do see some questions rolling in. We're going to answer them as they continue to roll in. In the meantime, just reminding people who are streaming in, the block is hosting a crypto conference called Emergence in Prague, December 5th to 6th. Purposely personal, 2,000 max capacity. So yeah, you can visit emergence.xyz to get your tickets. And now we're gonna open this up to Q&A. Some questions are rolling in. Do you think the recent Infinex NFT patron sale is a model others will follow? Where do NFTs go from here? Yeah, so I think the Infinex NFT sale is an interesting spin on the typical token sale, right? It gives it rewards people who previously deposited and have shown activity on Infinex before the sale was announced. And then two, it gave a lot of people options on different options on what valuations they were buying into, depending on how long you wanted your tokens to be locked, right? So people who had longer locked tokens had cheaper valuations, matching those of I think even private investors, right? So I think they were those people who were locked their tokens or locked their purchases of the NFT, the Patreon NFT. At around the same period as investors had similar valuations. Those that locked tokens wanted the tokens to be released sooner had much higher valuations. So yeah, I think that's an interesting model to follow generally because it lets people decide the risk they want to take and then the returns, the comparative returns that they get back for the risk they take. I think it's always a good. I think it's always a good way to. I think it's always good that for projects to give general retail participants similar or equal footing to those of private investors, institutional investors. I guess the second follow up on that question is where do NFTs go from here? Yeah, I mean. Kind of hard question to answer in that do we know it's going up, do we know it's going down? Unclear. I mean, I think we can all agree in hindsight, NFTs had their own mini mania, and then obviously bubble burst at the top. I mean, many projects are still around, right? So they're not obviously dead. It's very similar to what happened during the ICO boom, where we had many tokens fail, thousands of tokens fail, but then of those thousands of tokens, we saw a surge of projects like Aave, Synthetics, the DeFi leaders, right, MakerDAO, come from those projects. So wouldn't be surprised if the remaining NFT projects are still around, continue to produce value, continue to innovate. We are seeing NFTs on Bitcoin now, order nodes and such, which can also get their boost from new successful deployments on Bitcoin with OPCat or OpCat, and various layer twos that the activation of OpCat could encourage. So yeah, where do NFTs go from here? I don't think I can give you a straight answer. It really depends on whether teams are continuing to innovate around NFTs, whether interest comes back to collectible space, or whether the meme coin space is just sucking up all the attention from NFTs. But I mean, we did get a mini Bitcoin NFT surge, right, in a few months ago. So I wouldn't be surprised if we get another surge at some point. Do you think the huge volumes and growing institutional interest in stablecoins contributed to Maker's rebranding decision? I think partially. I think when Rune pitched Endgame, I believe like roughly 2 years ago or a year and a half ago, his reasoning for Endgame was that MakerDAO was getting too messy on the governance level, and he wanted to rein it back a bit and make it a little more organized, and set the template for better organized, decentralized governance protocol. I guess kind of ironic in that Rune's basically leading that effort to make it more decentralized. But I do think Rune and I guess the broader MakerDAO governance community do see inflow of stablecoins starting to grab market share from MakerDAO. And obviously MakerDAO, they want to keep MakerDAO's market share at the very least flat, if not continue to increase it. And the aim and the end game and its many sub-DAO protocols and the tokens from the sub-DAO and the incentive of the Sky ecosystem will help boost those the growth of MakerDAO / Sky's stablecoin ecosystem. I guess a little bit nihilistic in that partial reason, in my opinion, of the rebrand is to bring fresh eyes into the MakerDAO Sky space, right? One of the reasons why I'm thinking that is because, I mean, the MakerDAO token split to Sky token split, I believe it's like 1 to 10K. So 1 MKR for 10K Sky. I believe that's the figure, or was it 60K? I don't have the exact figure online right now. But yeah, 24K. Okay. Yeah. So yeah, obviously a portion of or part of the reason is because they want more attention in the space, and token splitting into very small denominations or very high denominations helps encourage retail to purchase Sky. Having multiple sub-DAOs, all with massive or soon to be massive yield farming, token farming programs, will obviously bring in more money into the space. So yeah, I'm not sure if institutional interest in stablecoins or huge competitor volumes of competing stablecoin are contributed to the rebranding. I'm sure it's a portion of that rebranding, but I think Rune's core reasoning early on when he pitched it was he thought the governance was getting way too messy for MakerDAO to kind of sustain itself towards defined goals versus being a typical DAO that's just messy and running around. Yeah. Cool. I'm not sure if we have more questions. I know X stream is on a slight delay, so we're gonna wait like maybe 1 more minute to see if questions flow in from X stream. This is our first stream on X for the block research analyst call, so wouldn't be surprised if there are some minor issues that are people that the audience is dealing with. So yeah, I'll just open this up for 1 minute. Again, this stream is recorded. The recording and the slides will be published on the Block's research portal. The Block research team plans to start streaming these monthly analyst calls, markets updates every month. So it's the second of every month. We're going to share a link and start streaming regularly. So yeah, if you enjoy it, we encourage you to continue to attend these calls. Another coming in. Have you noticed any trends with ETF volumes around price or volatility? Yeah, I guess some. We do notice outflow. So yeah, I guess it's very hard to pinpoint whether price action is impacted by ETFs or ETFs follow price action. But we do notice occasional, and I'm not sure we can confirm there's a pattern, but we do notice occasional. We do notice like some more negative price action on weeks where we see a significant outflow from ETFs. Again, I guess it's hard to determine whether one's following the other. But yeah, I think that's my short answer to you. Let's see, I'm going to check X Spaces to see if there's any questions there. Looks like there's no questions. All right, I think that's it. Thanks everyone for attending. We're going to do these monthly markets updates on a regular basis every month. The second Tuesday of every month is the idea, and we're going to have fresh topics month to month, new charts, and continue to do these Q&As at the end of these calls. Again, live stream is recorded. Presentation and slides will be published on the Block's research portal by the end of the week. Thanks everyone for attending, and see you next month.